All right, good afternoon, everybody, and thank you for joining us for today's AAA webinar on the fourth tranche of the HHS Provider Relief Fund. Today's webinar is being presented by Asbel Montes of Acadian Ambulance and Brian Werfel, who is the AAA's Medicare consultant. Before we go ahead and get started, just a couple of our regular housekeeping items. If you have any questions throughout today's presentation, you can go ahead and use that Q&A feature on your menu. We'll either try to get to your questions throughout the presentation or during the Q&A portion at the end. Today's webinar is being recorded, and the PowerPoint slides and the on-demand recorded version of the webinar will go out in tomorrow's Daily Digest and will also be posted in the on-demand section of the AAA store. If you could please try to refrain from using the chat feature, we'll just be checking the Q&A button on your menu for any of your questions. And with that, we'll go ahead and hand it over to Brian to get us started.
All right, thank you, Megan, and good afternoon to everyone joining us on the call, and good morning to those of you joining us from the West Coast. Today's webinar is on the fourth tranche of the HHS Provider Relief Fund general distribution. Just a few additional housekeeping items before we get started. Just as a reminder to all of you that the American Ambulance Association is presenting this webinar for informational purposes only, and that you should not rely upon what we've provided here as either legal, financial, or accounting advice. To the extent that you believe that you might need more detailed information on any of the topics that are discussed here, we would certainly encourage you to discuss the matter with your local professional advisors. So in terms of an overview for today, we want to start with a general discussion about the Provider Relief Fund, PRF, Tranche 4, and how we got there. Then we're going to talk about the tranche itself and the monies that are being distributed in this tranche. They are a little bit different from the previous tranches in the sense that there is an additional funding source out there. We'll walk through the process itself for applying. And then just given where we are in the calendar and the upcoming September 30th deadline on PRF reporting, just to go over that briefly for those of you that are still in the process of getting those reports filed. And then, of course, time permitting, we'll stay on for as many questions as people have. We would also encourage you, as questions come up, just to, again, post those in that Q&A box. We'll try and answer them live as we're discussing the materials, with time at the end for whatever we didn't get to. All right, so with that in mind, just to review the timeline of what happened, the CARES Act passes in the end of the first quarter, early second quarter, in March of 2020. And the CARES Act created the Provider Relief Fund, which is operated by HHS, which designated that to its sub-agency, the HRSA. And what this leads to is a series of what are called general distributions. These are distributions that are made to all healthcare providers, and then a number of targeted distributions based on the nature of the types of work you do and or where you do that work. So, for instance, there are targeted distributions aimed at nursing homes. There are targeted distributions aimed at rural healthcare, hospital or institutional providers. As a general rule, EMS agencies did not qualify for any of the targeted distributions. Rather, we qualified for the general distribution, and this was made in a number of tranches. The first tranche, which went out the door in early April of 2020, was given to all enrolled Medicare providers, and it was based on a percentage of your 2019 Medicare revenues. It worked out to roughly $62,500 for every $1 million in Medicare payments that you received. This tranche 1 was given to all providers. You did not need to apply for it. There was a second tranche that went out in late April, so that same month, April 2020. This was the first tranche in which providers had to apply to get the money. And as part of that application process, they had to indicate their increased expenses and lost revenues for the first 2 quarters of, let me start over again. In the second tranche, they were asked to provide information on their 2018 net patient revenues, with the goal of getting every provider that applied up to 2% of that net patient revenue. Now, I want everyone to just keep this in mind because part of the confusion our industry has suffered is we're confusing some terms when we talk about the tranches, because a lot of us didn't get a tranche 2 payment, even though we applied for it. That was because we got a disproportionate amount of money in the first tranche. So again, that one was based on Medicare revenues, and it assumed that our Medicare revenues were a percentage of our total revenues roughly equal to what an average healthcare provider was. However, because many of you get a disproportionate share of your revenues from Medicare, you got a larger amount in tranche 1 than you would have gotten in tranche 2. Therefore, you didn't get anything. We then fast forward to October of 2020 when tranche 3 is announced. This was again an application process. And in this tranche, the monies were distributed in a 2-part process. The first was to get everyone up to 2% that wasn't already at 2% of their net patient revenues. Now looking at 2019 numbers. And then to the extent there was money left over, they gave a quote equitable distribution. What that worked out to was bringing all providers up to 88% of their total reported losses. And one thing to keep in mind as we go through this tranche 4 and the PRF reporting is the term losses is being used here to mean a combination of those increased expenses that were otherwise not reimbursed by other sources that were directly or indirectly attributable to the pandemic itself, and any lost revenues that you suffered as a result of the pandemic. So the term losses here means both increased expenses and lost revenues. So now we get to tranche 4. On September 10th, they announced the release of an additional $25.5 billion in COVID funding. Now, this is $17 billion that's coming out of the HHS Provider Relief Fund. And I believe I have that number wrong. It's 8.5 billion. I apologize. In American Rescue Plan funds, and Asbel, correct me if I'm wrong, but this was the legislation that passed in December of in the fourth quarter of last year, which distributed, among other things, large amounts of money to municipalities and others to help them prepare and respond to the pandemic. And this money is being designated for rural Medicaid, the CHIP program, the Children's Health Insurance Program, and Medicare providers. So this is really targeted at rural. In addition, they have also opened up an appeal process, which they call a reconsideration process, for those of you that applied for tranche 3 funds, did not get anything, or got less than what you think you should have gotten based on what you believe to be your reported losses, again, meaning increased expenses and or lost revenues. So there is a link to the overview of that process. They still have yet to announce the final details for when this can be filed, et cetera. But if you believe that they didn't properly calculate your tranche 3 payment, there is now a mechanism to then appeal and try and get some more money that way. Unfortunately, this will not help those of you that did not apply for tranche 3 and therefore didn't get anything. All right, so with that, Asbel, I'll turn it over to you to talk about tranche 4 itself.
Perfect. Hey, thanks, Brian. And just so you guys know, keep your questions coming in. Remember to please use the Q&A and not the chat feature, as that'll help us kind of work through the questions and answers as we walk through this. As Brian just mentioned earlier, the appeals process regarding the methodology of phase 4 funding or phase 3 funding is also going to be applicable to phase 4. And there are reasons for that as we walk through some of why you want to apply. Everybody that is tuning in here should be applying for tranche 4 or phase 4 funding. And we're going to walk through that. You're going to hear us continue to beat that drum. The most critical piece right now, folks, and it was very confusing on phase 3 funding, hence the reason why a lot of ambulance services did not apply. However, because we are looking at quarter 3, which is July the 1st of 2020 through March the 31st. So quarter 3, quarter 4 of 2020, and quarter 1 of 2021 is the applicable period where they are going to be looking at your lost revenue and increased expenditures. There's lots of questions that we are getting and coming in. Well, what about if I had large exponential growth, I'm gonna have a lot of lost revenue, but I have a lot of increased expenses, or vice versa, or a combination of both. Remember, it is okay to have zero losses or zero revenue losses, but a percentage of increase of expenses in each of these areas. Many of you, we have been facing a workforce shortage crisis, a lot of that. So you've got to look at this through siloed lenses in each of these quarters as well. So as we go through the PRF reporting tool, things like that, you'll understand some components as we work through this. The easiest thing to really understand are the elements of the eligibility. They are planning on having at least a minimum payment for every provider that applies if you have increased expenses, unreimbursed increased expenses, or unreimbursed losses in those quarters. There's at least a minimum payment. Now, they do have a disclaimer there, and this is one thing that we need to understand as an industry. They are looking at small, medium, and large businesses. They are also looking at rural dynamics, as well as those areas that you serve that have an underserved population, which is Medicaid, Medicare, and CHIP services as well. So they've combined two processes into one application. This is what Brian talked about earlier, the $8.5 billion and the $17 billion of the general allocation to create a $25.5 billion pool, with the intention that they would like to, based upon the application, to get the small providers that really work in the underserved areas and rural areas, to get them up to at least 100% of their reported losses. That's their intent. That doesn't mean everybody's going to get there, because it's going to look at how many people applied and work through that process. So when you understand what they're looking at, they're doing this 75-25 principle. 75% of that is going to go based upon this formulary as you are seeing here on the screen. The other 25% of that $17 billion allocation is going to look at bonus payments relative to the amount of lives or beneficiaries that you serve that are Medicaid, CHIP, and Medicare patients, so children as well. Who are we in EMS? This is what we do. This is the advocacy that the American Ambulance Association did in conjunction with the other large associations, the International Association of Fire Chiefs and NAEMT and others, to really bring to light that we were disproportionately being reimbursed. However, we largely serve underserved markets as well. So this is how they're getting at it. Now, a lot of people are saying, well, they're going to bring and try to price it up to Medicare rates. This is important to just recognize because of the amount of money. But remember, you are capped at whatever you report as your increased expenses are reported losses through the process as well. The next slide, Brian. As well. So, and remember, the $8.5 billion is also in conjunction. So you have the 17.5, the 8.5 billion. That is going to be really focused on rural needs, and I'll explain to that, as well as if you're eligible to serve the patients. Now, this was something that we immediately, when this originally came out, got clarified, and subsequently they also clarified because the impact to the home health industry as well as the ambulance industry, because we are mobile units moving into and servicing rural areas, is this is where they're going to be looking at your encounter data. What that means is the claims that you filed to get reimbursed, they are going to be looking at that information to determine how much of the rural and underserved patients do you service. So they are going to be looking at that. It doesn't appear they're going to be requesting you to provide that information in the application process. This is going to be looking at encounter data based upon those time periods. So we have been advising to make sure that you've looked at that, you understand your numbers, because remember, as we talked about earlier, you are going to have the ability to challenge if you don't agree with the methodology once your payment is actually received. So know your data, know how many Medicare and Medicaid patients you are servicing, as well as know how many in rural areas that you are doing as well. So if you're a service that, you know, hey, my data shows that I'm servicing 30% in the rural area, but I have a mixture of Medicare and Medicaid of 70%. Once they establish the methodology, you're going to want to look at that, because I do have concerns about the encounter data and how that information from state Medicaid offices gets reported to the feds. And to the feds, especially because a lot of you have Medicaid managed care out there, and all of that encounter data is supposed to be a repository on the federal side as they work through. And we all know how that happens and how that works. So you might be expecting, based upon their formulary, that you should have got to 100% of your increased expenses or revenue losses, and you wound up only getting 75%. You'll need to know your data in order to challenge that, because you will have that ability to do as well. Next slide, Brian. 2. So that's kind of, go ahead, Brian.
I was going to say, let's just dig into the application process itself. The portal does open on September 29th, so in roughly, 5 days from today. And in terms of what's going on here, let's talk about some best practices as well. So you want to talk about first determining whether or not we're going to qualify for that rural bonus?
That is correct. So if some of you are trying to figure out, do I qualify in that $8.5 billion rural piece? There's a few different ways to figure that out. You can actually go into the HRSA tool. This is if you want to apply for a HRSA grant, and you can key in the location of your service area. And it will tell you what parts of your area are in that rural encompassing a piece of it. My standpoint for you guys would be, because we are mobile units and mobile area, is to run and look at your revenue reports that you did from July the 1st of 2020 to March the 31st of 2021 to determine how many claims were you paid at the rural rates or what have you. If you want to just do a really quick and easy and you're trying to figure out where you're at, just go into that tool, key in your county, and it will tell you if any area in your county is in a rural or underserved population, or your service area. It will kind of tell you where that's at. But they are going to be looking at the encounter data, and that's what helps home health and all of them. For instance, if you are a stationary hospital site servicing those beneficiaries, then you would just key in your practice location, and that would tell you if you qualify or not. But because we are ambulance and we're mobile, best way to get at your data is to understand your service area, what those numbers are, and then what your mixture is. Is it 70-30 or something like that?
Yeah, and I would just add that for those of you that use billing agencies to bill, this is information that they should be able to generate for you relatively easily. If you're not aware, using Medicare as an example, Medicare will pay a different amount or allow a different amount based on whether or not a service is urban or rural. So simply basically looking at the allowables on remittances would give you a sense of the percentage of your trips that are qualifying as rural. One question we had that just, I think it makes sense to probably answer at this point is, for those of you that do intend to apply, and again, we encourage everyone to apply, is where do I actually grab that portal from? So it's actually on the HRSA.gov website, and then it will link you to the PRF program. And then right there in the middle of that will be a big screen that says access the portal. That's where you'll go. But presumably,
remember too, once it goes live, pay attention to the listserv from the American Ambulance Association as well, because we will get that out there to you the moment it goes live.
Yeah. So in terms of what documents you're going to need, what they're going to want to see is essentially financials. Where the period they're asking for is a period for which you already have filed tax returns, that would be the highest and best evidence for those financial statements. But they also do recognize that many of the periods we're looking at here are within the current tax year or in a tax year that's just closed where those documents are not prepared. So you are permitted to use internal financials for these purposes as well. This is no different in terms of the requirements than what's been required for the first 2 tranches to date. So.
Yeah, and just remember that, I'm going to reiterate that. You need to be compiling that now. Some of you guys look at this on a yearly basis. I know we have a lot of governmental entities here. You're going to want to break it down by quarter if you did not, because most of you did not apply for phase 3. so you probably don't know what we're talking about. So make sure you get it by quarter. And remember too, we are suggesting that you apply early. Now, people have said, how long is the portal going to be open? Because they are indicating it's going to follow phase 3. Phase 3 was open for 30 days. However, they are strongly recommending you provide as early as possible, because remember, the distribution is they cannot talk about the equitable distribution side until they see how many applicants that are involved in this process as well. Brian?
Yep. All right. Oops, sorry, computer froze there. All right. One other thing just to mention here is, for those of you that are thinking about your cost reporting obligations going forward next year, or frankly, for anyone that we do recommend that you do take a look at the Amber tool. This is intended to be a sort of a TurboTax, if you will, for EMS. It's going to facilitate you not only getting your cost data reports done, but it can also be used as just a quick and easy way to capture all of the information that you're going to need to fill out, not just your Tranche 4 application, but also your PRF reportings for the first period of time, you know, and then there will be a second, third, and fourth reporting periods as well. For those of you that are have already accessed it, great. If you're not, I would encourage, especially if you're a small provider, we do have grant programs through the SAVIC Foundation that will allow all of you to access this, you know, without cost. But this is a very, very useful tool for just keeping track of all of these things. Key point. The key point here is apply. Even if you don't think you're going to get anything, apply, right? The actual information they're asking for is not particularly labor intensive to grab. It shouldn't take more than an hour or two, right? And you frankly may be surprised once you go through that exercise, you know, that you may have more losses than you thought you did, right? You know, also I would just add, and Asbel can certainly add to this, is there were a lot of people that elected not to apply for Tranche 3, in part because based on their understanding of what was going to be distributed, they didn't think they were going to be eligible for any funding. And I think a lot of them got a case of buyer's remorse, in part because when they did distribute the monies and quote equitable share, that's all we knew going into it, right? No one thought it was going to be anywhere near 88% of your reported losses, right? So from my perspective, it is a fairly small time investment to apply. You may be pleasantly surprised. Even if you don't think you're going to need the money and you might have to give it back later, your worst case scenario there is an interest-free loan from the federal government. Take it, right? So our strong recommendation is to apply, right?
And I think now there's a lot more clarity, Brian, around the reporting piece as well. What does qualify as an increased expenses? What if I didn't have any revenue losses, but I had increased expenses? There is a lot of more clarity around that than the phase 3 application process. So phase 4 should be very similar now that we kind of understand it. We have had increased workforce shortage issues. Remember, that is what we have been talking about. EMS needs more money. And so if we come out of this and we do not apply, then basically all of the New York Times articles we're seeing, all the NBC reports, all the whatever news outlet's been out there, we've been showcased about our increased companies going out of business in the rural areas. That's why you see a lot of rural targeting. Just know that you need to apply. And if you're not sure, there is a lot of us that will help you ask questions. You're going to see stuff here. Ask questions. Don't assume you cannot report it, because a lot of you, as we're talking through, it appears that maybe we're not looking at this through the right frame as well. So I just want to throw that out there as we work through this process. And there's some good questions coming in here as well that we'll get to as we work through the process. Some of you guys are asking about the timeline of the payments. Remember, they cannot give and issue a timeline. They have an intent to what they want to go, but I'm going to go back to the intent of this distribution. you can pretty much expect if they're going to get money out the door. This has not been clarified, but this is the MO of what they're trying to do, is to get the funds quickly dispersed to those areas that need it as quick as possible. So think rural areas, small businesses, those that are serving the underserved populations. If you're a larger, big business, and so a lot of people have asked, well, what do you think they're going to consider big business? Based upon other definitions, not in this piece, of what the administration thinks big business is, think around the $250 million revenue mark. If you're over that, more than likely you're going to be considered a large business, okay? They're not going to try to make you whole. They have no desire to make you whole, and they pretty much tell you that in the process. They're going to give you a base payment, but it probably will not make you whole. But if you're small business, rural, underserved area, which is a large portion of the EMS industry, they do have an intent to try to get you there. So kind of keep that piece of it. We don't know the details of that. A lot of those details will come out after the application process opens. They close the application process. Then they understand how many providers they're working with, the overall total reported increased expenses and revenue losses to kind of move us through that process. Brian, I know we're going to talk briefly through the provided report funding, and then we'll get to some of these questions as they're coming in.
Sounds good. All right, so let's turn over to the reporting obligations. So here we're talking about the first two tranches for most of you, and we're talking about the deadline that currently is coming up at the end of this month, although one important thing to keep in mind is they have announced a 60-day grace period. And while they're still technically indicating that the reports are due by September 30th, what they're saying is that they won't take any actions against anyone that gets those reports during that grace period, which runs through the end of November. So really the new deadline is the end of November. And there are some arguments that can be made for getting your report in as early as you're capable. There are some equally compelling, and in many cases more compelling, arguments for frankly pushing back and taking advantage of that grace period. Asbel, do you want to talk about the potential advantage of holding off? Or
yes, so a lot of people have said, well, that the directive was that basically you're out of compliance even if you exercise the 60-day grace period. Just remember, they gave you a grace period, so the penalty is not invoked. What's the penalty? The penalty is recouping the funds that you received. That's the penalty. So technically you're out of compliance, but they're not exercising the penalty during that 60-day grace period. The reason why we are suggesting you might want to exercise a portion of that, and this is me suggesting that, is especially if you're applying for provider force, to make sure that your reporting is consistent. A lot of you have had questions, and there has been some concern about understanding the consistency of your data through the process. Remember, in the PRF reporting tool, you are actually disclosing your increased expenses or your revenue losses that were unreimbursed through the process. So that kind of carries forward into painting the picture for your phase 4 as well. So I'm strongly suggesting that if you're going to look at phase 4 funding, you kind of work through that process. And if you're 1 or 2 or 3 days from that reporting piece, while you're out of compliance, they are not exercising the penalty portion of the grace period, during the grace period.
right. So in terms of the reports itself, the reason why and this is a question that's come up, is, frankly, why do we even need to do these reports? Or do I need to do them? Or what's the consequences if I don't file the report? The shorter answer is, when you agreed to accept money in either tranches 1, 2, or 3, you agreed to a certain set of terms and conditions, which detailed how you could use the monies, what it could be used for, and whether or not you had to provide certain reports. So just anticipating a question that's come in already a couple of times, if you don't file the necessary report, they will likely ask you for the money back. And again, the purpose of the report is to determine whether or not you've used the monies in the proper, or the ways that they've anticipated or expected you to use it for. So in terms of what's required for the reporting, one of the things we have to keep in mind here is there are a number of different periods of time that sort of overlap. And I think a lot of people get a little bit confused. So the first reporting period covers monies that were received during the first payment received period. That ran from April of 2020 to June of 2020, right? What they're then saying is that you have through June of 2021 to use the monies and then report on them in September of 2021, right? So what we're really reporting on here is the first two tranches. That money either had to be used to offset lost revenues, which they're going to measure in the first 2 quarters of 2020, or increased expenses during that period, and then it does extend further out through that June 30th deadline, 2021 deadline, right? If you got money in later periods, for those of you that got tranche 3 payments at the end of last year, you will have to report on those tranche 3 payments in the second period, which is due it's due at the end of March 2022, and that will be reporting on the monies that you got in the second half of last year. This tranche 4 will be received in period 4, and therefore will be reported on not this year, not next year, but in the first quarter of 2023. So what we're focused on now when we talk about reporting is only tranche 1 and 2. One other thing to mention is it only applies if you got more than $10,000 during a reporting period. So if you got $10,000 in tranches 1 and 2 combined, you will be obligated to file a report in this first period. If you got slightly more than that, and this question came up, and then refunded a portion of it to take you below 10,000, you would not be required to submit the report. I'm not advocating for that, but that is a question that came up for a number of companies that were on the margin. Once we determine that you're required to report, we then divide the world into 2 groups: those that got a relatively small amount of money and those that got a relatively large amount of money. And the dividing line for this is 500,000. If you got under 500,000, you will report your lost revenues for each of the quarters that are involved, and we'll talk about that in a second. But you will not be required to provide a detailed breakout of your expenses. Rather, you will simply report in 2 general categories: your general and administrative expenses, and then your expenses that are specifically healthcare related. If you have over 500,000, they're going to ask you to break out within each of those 2 broad categories and provide more specific information. So just to go through some of the data elements, there want some demographic information on the company. The reporting entity is a tax ID number. So for those of you that have multiple MPIs under a single tax ID number, you will consolidate all of the PRF funds that were received for each of those MPIs and make a single report under the tax ID number, right? If you have multiple tax ID numbers, you may need to file multiple reports here. Or you would need to disclose those tax ID numbers as subsidiaries of a parent company and then file a single report. Asbel, you want to talk about the single audit issue?
Yes. So on the single audit, guys, it's only for those that received in the reporting period the $750,000 or more. Most of you, the majority of you, received less than $750,000. So the single audit is not applicable to you. What this is for those entities that receive, now most governmental entities, you might apply because you're getting funds from transportation, you're getting funds from other grants or what have you, including this. So you might go over that threshold. There's already a single audit function that you would have to do. It's just combining all those grants into one single auditing. So you're not doing an audit, providing an audit for each of those individual grants. This is a new process for a lot of for-profits or not-for-profits that are not used to doing this. The threshold is $750,000. Now, does it mean you've got to go out and do kind of the same single audit? It is open for you to use, and we strongly suggest you get with a CPA firm. There are many firms that already specialize in doing this process. So if you are over that $750,000 threshold in PRF report and PRF funding from the first or second tranche, we strongly suggest you get with an accountant firm that takes you through that process. If you're not sure what we're talking about and you get there, there is the ability for you to ask for an extension. We strongly suggest you apply for that extension as well. But if you've received over $750,000 in grant funding, many of this might be governmentals on here. You need to kind of understand that process. A lot of you, if it's your city or your county and your financial office doing that, they probably are already aware of this because this is not new for them. But if you're a for-profit or not-profit and you're at that threshold, you've received more than $750,000, we strongly suggest you get with an accountant and start working through that process.
Thank you, Asbel. And then let's talk about, and I think this one's probably you should take as well, Asbel, is just how other assistance we've gotten during.
Yes. So there's a lot of questions that are coming in regarding this right now. So hopefully we're going to answer a lot of your questions in this one gamut as well. So remember in the PRF reporting tool, that is all unreimbursed expenses, unreimbursed. So first, what you have to do is go through and figure out, did I already get reimbursed by FEMA for some of my expenses? My PPP loan that I received for my 8 to 12 weeks of salary. Did I already get reimbursed for that? So when I'm reporting my unreimbursed expenses, that I am negating that out of that number. Now, they are not in the PRF reporting tool saying, aha, we're going to do a checks and balances through this to make sure your unreimbursed expenses are matching. They're not doing that. That is your self-reporting. Just know you got to keep your paperwork and your audits together. So if you got some funding to help you with salaries through your local city because of the local and state governmental dollars that were in it, this is what we're talking about, the local, state, tribal assistance. You guys may have worked at the state level. Some of you guys went into the state level and the state said, hey, we're going to pay you X amount of dollars. Like I know in Mississippi, they were reimbursing, I think, up to $5,000 out of local, state governmental dollars. Illinois had a similar concept. You need to remove all of that out first before you say this is unreimbursed expenses when you look at that. Now, lots of questions have come in here. Well, you know what, wait a minute, then maybe I just have loss of revenue. Is it okay to show in each quarter 0 unreimbursed expenses? It is okay. It doesn't flag your account. Actually, HRSA has had several webinars, folks, related to this, that it is okay to put 0 in your expenses and maybe only focus on your loss of revenue, because most of the other assistance that came through really was really portioned more towards your expense side. Not all of it, but a lot of it really looked at expenses and reimbursement. So you may have gotten some FEMA, you may have gotten some money through Treasury or some other funding mechanism, and so you may only want to focus your stuff on lost revenue. So just remember, this is like your piece that you're going to have to keep up with to make sure you're only reporting those unreimbursed expenses that some other component did not pay you for in one of these 6 categories.
All right. So, and now in terms of getting into those specific categories, here we've just listed those detailed categories of expenses that, to the extent you got more than 500,000, and again, we're only looking at tranche 1 and 2, but to the extent you got more than 500,000 in that period, this is where you would need to break out your information into more detailed categories. And then same thing on those healthcare expenses, you would need to break it out into the more detailed categories. Now, one question that's just come up a lot is, I don't know that I can necessarily break out my increased expenses to my supplies versus equipment, because what I'm doing is writing a single check to a vendor that provides both of those to me. This is not intended to be rocket science or, to a level of precision. So I would argue that, yes, it's perfectly okay to look at the 2 as a combined unit and to measure the increased amounts you paid that vendor during the period of time as opposed to the previous period, right? And then just apply a percentage, based on historically when I write a check to, I don't know, Stryker, right? or any other of your supply/equipment vendors. If historically that's 50% medical supplies and 50% equipment, then you could certainly carry that forward and allocate it that way.
And the only thing I would add there, Brian, is because this has been a lot of questions as well, is remember but for the pandemic, it's the increase of the expenses. It is not all your expenses.
Right.
So you're not talking about, I'm going to go and do all my payroll. It's the payroll above and beyond what you normally. So 2019 is kind of your base year. And if your payroll is $1 million, but now it's $1.5 million because of the pandemic, it's the 0.5 that we're talking about here, not the 1.5.
Right. And getting into that, let's talk about how that plays into with net unreimbursed expenses. So, in many cases, they may have gotten some money from the state to help keep their payroll supported, right? So Asbel, I'd ask you just to sort of walk through how maybe the Paycheck Protection Program relates to unreimbursed increased payroll, because that's a question that's come up a lot. And then two, just talk about any other federal assistance, FEMA, EIDL, et cetera.
Correct, because I think that is one is, remember, several of these things were forgivable. So it worked kind of like a loan, but it was forgivable if you met the parameters of it. Don't confuse that with you went out and got a loan, but yet you got to pay that back over time. That is not other revenue received. We're not talking about that. What they're talking about other revenue received is that revenue you received that reimbursed you for something else that is not payable back. So it's like a forgivable grant. This is what this PRF is. It is money they're giving to you to give, and if you don't need it, then give it back to us. Okay, it's not just to add to your bottom line. That is not what we're talking about here. So if you're looking through like the PPP loan, they were going to pay you for your 8 to 12 weeks of expenses of your payroll expense through that process. So what you would do is, if you had unreimbursed expense but for the pandemic, while they would have paid you for that, that was applicable. You met that. They would forgive your loan as long as you kept people employed. That's what they were looking for. But in general, this PRF funding was for unreimbursed expenses because of responding to the public health emergency. So whether you had a COVID patient in your city at all, you may have taken measures to prepare for, to respond in the event of that happens. So almost everybody on this call, you would be applying under that general definition. So if you kept people employed, but all of a sudden, which we know is happening here, we're having to increase payroll. Something may have been passed to bring somebody to minimum wage, or now you're at $18 and you're at $20 an hour. And normally you were at $12, but you'd had to increase by $6. That $6 is what is unreimbursed expense due to the public health emergency and some of this work. I'm focusing on workforce shortages. So you had to buy ambulance units because of the demand, because of the surge, and all of a sudden you're searching for something. Or vehicles are increasing. We budgeted maybe $500,000 per unit. Now I'm just throwing out numbers here, guys, because then you're going to be wondering what kind of units are you purchasing. But I'm just throwing it out for an illustrative example. 500,000 and now it's 750,000. Well, that 250,000 is what we're talking about, is related to the public health emergency. So hopefully some of those examples will get your mind kind of understanding. If you are having to get creative in your expenses, I'm strongly suggesting you probably do not want to include that expense if you're thinking that through, and look and see, is there revenue loss? And it is okay to say, you know what, we grew exponentially as a company, or we had an increased patient intake, so I didn't really see any issues with my revenue. But so it's okay. You might say 0 on your loss of revenue. You had no loss of revenue. And so most of your stuff is going to be on increased expenses. I find it hard to believe, understanding and talking to many of you across the nation, that you're not in one or the other category because of the workforce shortage crisis we're under. And we know we're increasing exponentially. Where it might be problematic for you, especially if you're governmental, your expenses might be being reimbursed through local, state governmental dollars of that $350 billion that's been appropriated to the local and state. You guys might be getting reimbursed for all your expenses there. That is what we're talking about. You might have another source that's been paying for you. So that might be where you're only looking to see where your loss of revenue. And so you might have no increased expenses that haven't been reimbursed by other sources. So you're going to focus predominantly on, do I have any loss of revenue? And that's where it's going to become important. Hopefully that provides some clarity for you.
Let's hope so. All right. So now we get into revenue, and I think there's a number of questions that have come in on the revenue side. So again, what they want is to submit your patient care revenues for the 2020, the first 2 quarters, and they've given you 3 different methodologies you could use. Option 1 is to do a comparison of your revenues for each calendar quarter in 2020 compared with your actual revenues for those same calendar quarters in 2019. So that's what we'll call the actual to actual comparison method. A second methodology that can be used is to compare your 2020 results to your 2020 budgeted results. And when I say 2020, I mean calendar year. If you use a fiscal year, you're going to have to use whatever you call that fiscal year, right? But the period that corresponds with these calendar quarters, right? But note, in order to use the budgeted method, you must have had a budget approved as of March 27th, 2020. In other words, they won't allow you to use a budget that you developed after the pandemic's impact was clear, right? So what they're measuring is basically where you thought you would have been versus where you ended up based on the pandemic, right? Not whether or not you've made any changes to your budget based on your knowledge about what the pandemic was going to look like, right? And then there is this third methodology that allows you to use any other methodology that you believe is appropriate. Few words of caution on that. One, they have indicated that you will be at a higher risk of being audited if you use an alternative methodology. The second is, it is very difficult to imagine a situation for our industry where an alternative methodology is likely going to be the best way of measuring this, right? So I would definitely take a look at the 2. Asbel, I'm sure you have some thoughts on this. But what we would recommend is, if you had a budget in place as of March of 2020, that you run your numbers both ways. So they will ask you to break out your revenue figures regardless of whether you use the actual to actual or budgeted to actual methodologies. They want you to break it out by the various payer types. Now, they will not use those payer types to determine whether or not you can keep your PRF money. This is just an informational use for them. And you can see in the PRF report one clear way they might use that, which is to calculate the payment for underserved areas in Tranche 4, right? But, and this is another important thing to keep in mind, they are doing their comparison quarter to quarter. So what that means is there are entities out there that year over year may not have had a revenue loss, right? They got exactly the same amount in 2020 or even more than what they got in 2019. In other words, they broke even or had a profit, right? But the way in which they received their money was different. So their revenues dipped in the second and third quarter, and then not only recovered to historical norms in the fourth quarter of 2020, but exceeded those historical norms. And that's what brought them back to even and or a profit. The way HHS is going to calculate this is to look at the individual calendar quarters. So if you lost money in a calendar quarter compared to whichever methodology you're using, either your actual 2019 results or your budgeted 2020 results, they will allow you to claim the losses in that quarter as lost revenue, which can be applied against the PRF funding. So it is very important not to automatically discount that you're going to be able to keep the money simply because looking at your year over year results, you ended up flat, right? Asbel, anything you want to add?
Nope.
That was easy. I'm going to let you field this one because this is another common area of questions. I will just simply preface it by saying that if you are confused when you get to the section on facility and staffing metrics, thinking that it does not apply to ambulance, you are not incorrect. Asbel, walk us through how we should probably take a look at this.
Yeah, so really, guys, this is number one, an informational, kind of think of it like a survey only piece. Personnel metrics is going to be the only thing that really applies to us when you're going through that process. Some of you are trying to figure out the clinician, non-clinician, because it's giving examples of like nurses, doctors, or whatever. Your clinicians would be EMT, paramedics, or what have you. Non-clinicians, they're really using this in support of the workforce shortage issues that have been tried. So they're using this data. So patient metrics, facility metrics do not apply to us. Unfortunately, it's just for the facility. We wish we could do that. It's really maintaining only for the facility side of it. So A is what you're going to be focusing on in your reporting. B and C, you're not going to have any information to report there.
Succinct.
And I'm sorry, PHE is public health emergency. My apologies, folks, as you guys are working through, a lot of us are talking about in acronyms. It's public health emergency, PHE.
Right. And again, just as a reminder to everyone, as you go through this exercise, the one no-no that HHS is guarding against here is this notion of double dipping. So what they want to make sure is that if we're claiming something as an increased expense here, which conceptually means you're going to use PRF funds to plug that expense, that expense has not been otherwise reimbursed elsewhere. So part of this is just, it's very important to allocate, because you're getting, in many cases, relief funding from multiple different sources, right? You may have gotten a PPP loan, right? You may have gotten SBA EIDL loans. You may have gotten state funding. Perhaps you're going to get additional funding through the American Rescue Plan that comes through the municipality or then to you, either through a grant or because you are affiliated with the municipality, right? We can use all of these monies, right? But what we need to just be concerned about is that we're not counting an expense twice, right? So your PPP money, generally speaking, was used to reimburse payroll, not increase payroll, but your existing payroll, right? Assuming you used it all for that, it would not go towards increases in payroll, right? That could be claimed as an expense here, but if you applied other relief funds towards that payroll increase, then no, you cannot claim it here. So just be very mindful that you're not double dipping, just to avoid a potential pitfall there. And then just again, don't reinvent the wheel. If you're already tracking this information because you got a head start on cost data, most of the information that you will need for PRF reporting is information you're already collecting for your cost data, right? Now, you may need to make certain changes in your chart of accounts, et cetera, because there may be certain new line items. You know, for instance, payroll, if you added a hazard pay, you would want to separate that out from an individual's base pay just to make sure that you can track it. But more likely than not, you already have the financial processes in place to track this amount. So it's not particularly complicated. I think as an industry, we have made it somewhat more difficult. So deep breath, right? Trust your existing processes, and you will get through this. You know, at this point, I think it probably makes sense to just turn to some of the questions. So I know we have a bunch open there. So Asbel, I'll throw the first one to you. So the question is, do we use the same COVID-related expense and loss of revenue calculations for this phase 4 application?
So let me go through this because this is probably something we should have covered, but there's been some clarification, guys, regarding what you need to prepare for as you're working through the documentation requirement. So on the website that we gave earlier as well, is going to tell you're going to need your IRS forms, very similar to what happened in phase 3 and phase 2 to upload. But here's what's important when you're looking at your quarter and your comparative information to understand your losses of your increased expenses and your revenue losses, is you should be looking now at patient care you did in quarter 1, because remember 2019 is the benchmark. So you're looking at quarter 1, 2019 compared to quarter 3 and quarter 4 of 2019. You should have that information compared to quarter 1 of 2021, quarter 3 and quarter 4 of 2020. So you're comparing 2019, where was I before the pandemic, and where am I now in those quarter 4s? So that information, when you're looking at your COVID-related expenses and loss, whether you're looking at that from the portion of it, that should all be negating that out. as well when you're doing your comparative through the process.
All right. What if I cover both urban and rural areas? Do I need to submit my financials for this tranche 4 solely
No.
for the rural area, or am I submitting one application?
You're submitting one application. You're submitting everything. Remember, the rural piece of it, guys, is for bonus payments. So say, for instance, you are not in rural or you did not serve any Medicaid or Medicare or CHIP beneficiaries. Basically, you would just get the minimum calculation that they will calculate and give us that formulary after all the applications come in. That's one thing. So think of it like in 3 tiers. I get a minimum payment. Then if I also service in rural areas, I might get a bonus payment for that. And I qualify for I qualify for that 8.5 billion. And then if I do Medicare and Medicaid and CHIP services as well, I'll qualify for another piece of money, and I'm a small business as well. So you absolutely should submit. Where I'm telling you to understand your financials is when they do the calculation and they come back and say, you know what, we only see you got an allocation based upon this because our records, our data only shows that you service 30% of rural beneficiaries, but your data shows that you service 70% of rural beneficiaries because that's how you're paid. You would want to challenge that and appeal their decision if they didn't reimburse you up to it, because it was the difference between getting reimbursed 100% of your losses versus 50% of your losses. Okay, so that's why you need to understand the rural or what have you. But no, you should submit everything. Don't break it out by just your rural areas.
And maybe one follow-up question, Asbel, is we are not going to be the ones that make the calculation for what is or is not rural, right? It's going to be HHS based on its internal data.
That is correct. And that's why we're saying know your data, because we all know, several of us that have always worked in pulling data and FOIA requests on Medicaid data from states, they always have it wrong. So that's what I'm trying to say is I'm anticipating that to happen. And those that are probably going to want to challenge their payment are the ones that may have qualified to get 100% of their revenue, but you may have only gotten 70% of it. Then you'd want to go. Of course, if you got 100% of it and their data was, it doesn't really matter because that's kind of the ceiling that you would get anyway.
All right. Another question is, in reporting our phase 4 or applying for phase 4, would you include your phase 3 reimbursements, which increased receivables in the 4th quarter if your service was awarded funding for phase 3? So I think I'll handle this one. Asbel, feel free to just, jump in if you've got anything else to add. But I think what we need to just re-examine is our use of the term receivables here. So when we talk revenues, what we are talking about are revenues that are derived from patient care. We are not including any amounts we received in the PRF funding as revenues, right? So you are only reporting your revenues from patient care. They already know about your phase 3 reimbursement. And when we get to the reporting for phase 3, they're going to look at your lost revenue and your increased expenses in that period to decide if those amounts get, for lack of a better term, forgiven. But you should not be including any relief monies in your revenues, right? Those go in the other assistance section. Anything to add, Asbel?
You covered it wonderfully.
I'm on a roll. All right, we'll throw one to you. We acquired a business in December of 2020. Will the application take these additional revenues into consideration when looking at our lost revenue calculation in 2021?
It's a good question. This was answered by several of it. You're probably going to focus more on increased expenses because you're not going to really have a lot of lost revenue because of that. So you should have increased expenses, and that's why we're saying it is okay to have zero loss of revenue, but lots of increased expenses, or vice versa. Some of you might have increased and both. You might have increased expenses and loss of revenue as well. But in your situation, it sounds to me like you're going to be focused more on the increased expenses side.
The only thing I would add to that is, depending on the structure of the transaction that was used to acquire the business, it may be the case that essentially they'll be incorporating both your baseline revenue that they're measuring the losses against would include the business itself. So if you buy
the only other point that I would bring up now that we're talking about that, Brian, because we failed to talk about that, is they are very clear in phase 4 funding that after your payment is received, if you merge, if you're acquired, or you sell, you can pretty much guarantee you are going to get audited. So just make sure that you have all of your paperwork in line if that is an intent of yours. So I'm just going to throw that out there because it's pretty clear that they will audit you. They pretty much said that if after you get the payment, you do turn around and sell or merge or whatever else goes on.
All right, so another question that came in is, we are reporting the G&A, general and administrative and healthcare expenses, only if they are specifically COVID related, meaning above and beyond our normal operating expenses. Asbel, you want to field that one?
So, I mean, I'm not disagreeing with how you're looking at it, but just remember everything you did is COVID related. So hopefully you're not talking about only those related to the COVID patients we treated. If you prepared for, responded to, or treated COVID patients, which is pretty much, guys, everything that you are doing, you should not be portioning anything out only specifically to COVID related transport. So I'm hoping that's not what you meant and you are meaning what I just reiterated here. But if that's not what you're doing, you need to go back and relook at what you're doing.
All righty. Next question is, I'm a little bit confused about the rural eligibility because we're under the impression that we're coded as rural for Medicare and Medicaid payment purposes, but that rural eligibility checker says our whole county is not eligible.
Yeah.
And in this case, the question is coming out of Pennsylvania.
Okay, and here is an issue that we've always had because the HRSA calculator is, and without going into nerdy, is really on a RUCA or a rural urban community area that if you want to apply for a HRSA grant for funding, it looks at a RUCA tier level. The zip code file, as they're paying for it, they never adopted. This is something that the American Ambulance Association, we lobbied for so many years, and hopefully we're doing it again because of this census to get it to that RUCA tier, because we agree that that's what it should look at. However, it has been clarified that they are going to be looking at encounter payment data, and we know our encounter payment data pays us on a rural and factor based upon the zip code file. So that's why the encounter data is going to be used, and that's what they reiterated because this really impacts home health and the ambulance industry as well. That's why it's very important that you know your data. So if something happens where they don't put you in that category, this is how you're going to appeal. All right, so that's why we're saying know your data, but that is what's been confirmed, that it's where the beneficiaries are living, that you treat, and so we know that that information comes out of the Medicare and Medicaid encounter system as they pay us through that process.
All right. Next question is, I'm looking at my Q1 2020 for payroll expenses, and then I'm trying to find lost revenue. Would you look at Q1 2019, and anything over the Q1 2019 numbers would be the quote increased payroll that would be covered? Thoughts, Asbel?
So number one is that your payroll stuff would be expenses, not loss of revenue. So just want to clarify that, make sure we're talking the same, but you would be correct. So if your 2019 Q1 expenses and payroll were $1 million, and in Q1 of 2021, they were 1.5 million, the 0.5 is what your increased expenses would be related to the public health emergency.
All right. Next question is, in terms of slotting expenses, would I slot dispatch into clinical or non-clinical? I would argue clinical is my granular answer. My shorter answer is it shouldn't matter either way, but any thoughts, Asbel? I assume this is in terms of slotting the people into the proper.
Yeah, guys, don't overthink that. Do your clinicians, think about that your frontline people that are giving care to the patients, everybody else do is non-clinician. Don't overthink it. They're just trying to get an understanding of the PRF reporting that they have put out there and paid. how it is impacting the workforce and what our workforce is looking like. Please do not overthink that section. And there's another on here, have they defined small, medium, and large businesses? And they have not defined what small, medium, and large businesses are. That has not come out in the definition. I am going to assume when they do the calculation, it will. But if you look at what the Biden administration considers large business, small, medium, I would strongly suggest that you kind of think about it. And I know you answered the question here. You're definitely large business. So I'm going to just suggest that if you do over 250 million is kind of the gauge that I'm giving here. I have nothing on that except to understand how the Biden administration in other areas has defined large business outside of this PRF. I would probably say that's probably where it's going to land.
Next question is, we do not file taxes, so we cannot upload any data. Will this be a showstopper when completing the period 1 report? No, I would just include whatever internal financials you have to the extent they're audited by an outside agency. That would be fine.
Well, and I'll tell you this, Brian, they have clarified that piece as well, because they do understand some governmental entities don't have that it is an internal statement, whether it is audited or not, and the reason why you don't file. So they're going to just ask you for the reason, and you're going to, of course, say you're a governmental entity or what have you, but they have opined on that.
Right. Yeah. The only thing I would add is if you're a nonprofit, please keep in mind that you do file a not 5,500 form, but you do file something. It may not be called a tax return, but you do file financial statements with the government. I would use those in those instances. So next question, our 2020 budget, we're going to use our 2020 budget to compare to our 2020 actual to show lost revenue. The reporting period requires that this be broken out by payer and by quarter, while our budget shows an annual overall total. Is it okay to basically take that annual amount and then divide it by 4 to come up with quarterly numbers and then apply that against our actual results? What do you think, Asbel?
So I'm just saying, number one is make sure that your budget was approved by March the 27th by a CEO, CFO, or board, or whoever you're reporting to. I know a lot of it is on an annual, several of you, especially governmental entities. I think it is plausible to do a back end like that on first, second, third, fourth quarter. But as we're saying here at the American Ambulance Association, this webinar is for informational purposes only. And you just want to kind of probably talk to your accountant, CPA for best practices, but that would be a fairly best practice way to go. But remember, we are doing informational purposes only, so you can read between the lines there.
Sorry, just a little housekeeping on my end. Is the employee retention credit included as one of those, quote, reimbursed funding mechanisms similar to PPP? No, it is not. Tax considerations are totally independent of anything we're talking about here. So they're talking about direct government assistance there. And programs like grants and PPP loans, et cetera. So no, any tax benefits you get under any one of these various legislations would not be included in these calculations, either for reporting purposes or for application purposes for Tranche 4. Hope that answers that one. We're classified as rural and serve mostly Medicaid and Medicare. Is the lost revenue the difference between what you build and receive from Medicare and Medicaid? Asbel, you want to take this one?
So number 2 is you're going to look at it, and I'm assuming we're talking about phase 4 funding at this point in time. So you're going to make phase 4 application. So if you don't have increased expenses and you have lost revenue, you're focusing on the lost revenue piece. It's going to be the difference between whatever your lost revenue was showing, or your revenue was showing for quarter 3, quarter 4, in quarter 1 of 2019 versus quarter 3, quarter 4, and quarter 1 of 2020 and 2021. And that would be your revenues associated. If all you billed was Medicare and Medicaid, then that would be applicable of how you would look at that.
All right. And this is probably a question that I'm actually shocked it took this long to come up on, because it's one we get over and over again. And that's we receive funding from our state, but that funding has not yet been forgiven. So the state in this case structured it sort of similar to how the Paycheck Protection Program works, where the money is given out and then there's an application / reporting process, and then they forgive it as a loan. Can we use those expenses, or do we assume that the amount, we're going to then use that state money to offset an expense? Can I claim the expense now as unreimbursed because I haven't had it ultimately forgiven by the state, or do I have to assume that it'll be forgiven and therefore not claim it here as an increased expense? Good question. Asbel, what do you think?
And I think you're from Illinois and you're talking about the funds that you guys got through the local state governmental dollar. I'm going to tell you this. I think the intention of that was that that money you received on the state of Illinois was going to be forgiven. I'm strongly suggesting you do not include it. However, if you do, and they ultimately forgive it, you're going to have to pay the other money back. So one way or the other, you're going to pay for it back. I would suggest you don't include it, but if you do, you can do it, even though it's not currently, the expenses haven't been reimbursed. You can include it, but however, once they do forgive it, you're going to have to report it at that time and pay it back.
I think that's probably sound advice there. And then our final question, sorry, just catching up here. It just sort of goes to the facility and patient metrics. So there's a section in the reporting piece that asks how many patients, how many visits to the ED, et cetera. The question is, should we include only the actual trips to the ED as ED visits, or should we also include the AMAs and the refusals as
You don't
outpatient?
report that at all. You don't report that at all. They're talking about the facility metrics and the patient metrics. That does not apply to EMS.
Yeah. The only thing I would say is if you do elect to put something there, just be consistent across various time periods, right? Again, I don't think what you put there from 0 to infinity will ultimately have any impact here. This is not intended for us. And if I'm correct, that is all of the questions. So except for the one that always comes up, and that is, will we be receiving the handout / PowerPoint from today's webinar? Yes, my understanding is that anyone that attends the webinar will receive a link to the PowerPoint itself. So with that, I know we ran a little bit long. Thank you all for hanging on there with us. Just as a reminder, there are some additional resources out there on many of the things that we talked about both today and in previous webinars. And we've got the link there. It's on the AAA's homepage, COVID-19 webpage. And then, I think I went too far. So that's just a great resource for you to just grab a lot of this stuff that will also give you access to previous webinars on this topic and pretty much anything else that's COVID related. With that in mind, I guess I'll wrap it up. Megan, anything you want to add to close us out?
No, I think that's great. Thank you so much, Brian and Asbel, and thanks everyone for joining us. We had quite a big group on for a Friday afternoon, which is awesome. As Brian mentioned, we will be sending out the recording and the slides in the Daily Digest, and then an on-demand version will be posted up on our website as well. I see Amanda just posted a link to the deck in the chat box. So if you want to go ahead and grab that and download it before we end. And then if you have any other questions that weren't addressed, or if you think of something, you can go ahead and email us at hello@ambulance.org, and we'll have Brian or Asbel or somebody on our team get back to you. But that's it. So thank you guys for joining us, and we hope you all have a great weekend.
Yep. Have a great weekend, everyone. Thank you so much.